following is an update and technical analysis on the US equities, the US 10-year, as well as deep diving into the 60-minute charts of QQQ. Amid the swirling chaos of today's markets, inflation fears emerged as the ultimate catalyst ignited by a startling surge within the ISM prices paid index soaring to a 2-year high, where this single data drop sent shockwaves throughout the street as bond yields in the entire curve climbed and the once certain hope of potential rate cuts crumbled into dust. Or like a match dropped in a powder keg, it overshadowed some of the strong job opening economic data and unleashed a chain reaction where stocks tumbled, volatility soared, and even the almighty tech NASDAQ stumbled across the board. And we had, where I had mentioned, a nice clean positive divergent low right here in the US 10-year off the daily interval. We had a nice breakout, and I had emerged that the bond vigilantes had left the station months ago, citing its breakout and multiple backtests back at the beginning of October 2nd. That was the beginning stages for a huge rip and rally to the upside in the price of the yield, soaring, crashing the bond market 25% on a big move to the upside, in which could be gearing up on a potential cup and handle bullish formation pattern. Make no mistake about it, the technical aspect of this bullish posture continues to build on a potential cup and handle formation pattern. Huge price resistance amongst the 786 fibs retracement. Call it 472 price resistance. That will be the ultimate big key level to watch for any 10-year traders, bond traders, any stock traders, and near-term catalyst would need to take out bond vigilantes on a solid infused big green candle breakout above that key inflection point. Auto issue in some additional margin calls, stops to go off, TLT to crumble, and an all-out rage rally in the yield curve up to the 502 price resistance. Call it the major reactionary high of 2023 there. And that would signify a huge sell-off, in my opinion. Ultimately, coming in to spite more short sellers of the yield and long traders of bonds want to see a divergent high, completed divergent high into the 786 fibs retracement, ultimately negating any potential momentum within that cup and handle bullish formation pattern to retest and re-challenge the 448 handle. You will additionally put in negative and bearish divergence here within the RSI, oscillator, and stochastics on all 4 key technical momentum indicators if and when bond bulls are able to defend the 786 fibs retracement really at all costs to avert further damage within the key technical posture of the 10-year yield and ultimately the equity market all across the board. Taking you out to the USTECH100 cash futures based on the daily interval, biggest component to the NASDAQ here, in which I had mentioned 7 days ago, if and when USTECH100 futures would potentially flash a sell signal within the daily realm if it violently sold off into the close today. And that was 7 days ago. And here we are. Back testing amongst that key inflection point. We put in that sell signal. We had a solidified sell-off into the close. Back tested the 50-day moving average, fell slightly below it. And back testing the 1 fibs retracement, called the 20,756 level. And that is a big price support level. Big key mechanism for any technical traders and or bull traders to defend really at all costs there. Short sellers piling in to the primary uptrend resistance level. And they are in the green there. As far as that back test goes, make no mistake about it, we need to see the 50-day moving average undercut by short sellers and or bear traders to go on to re-challenge this big time 20,756 price support level. If and when that level is taken out with conviction, I would only expect additional margin calls, forced liquidations to go off on a re-challenge of this primary reactionary uptrend line. Call it a concealed multi-year price support level that has major reactionary lows and reactionary highs across that entire sphere. Big time. The biggest pivot point that we will have seen in quite some time, call it a few years at most, and that will be the ultimate price support level long traders and or bull traders would need to defend aggressively to avert an additional bigger, much larger sell signal, ultimately taking out the 200-day moving average, price support, concealed uptrend, the 786 fibs retracement, and that would issue in a validated bigger breakdown sell signal on the extent, the larger structure and posture of this security that would increase the odds, in my opinion, of a potential recessionary talk, spiking yields, and an all-out rush for the exits within tech. Zooming you in to the biggest component of the NASDAQ USTECH100 futures, QQQ on the 60-minute interval. Active, big-time price uptrend support level. You have a divergent low, nice positive and or bullish divergences constructed on all 4 key technical momentum indicators on a breakout, on a validated breakout. Out of this primary minor price resistance, downtrend resistance level, took out that level. We have some key Fibonacci levels, back tested, almost backfilled the gap, unfilled and unchecked gap, almost got shy of backfilling the secondary gap here. You have an additional unfilled and unchecked gap up above the 538 level. What is so significant about this key reactionary price pivot point is the 1% drop aligning very closely to the primary uptrend and the 236 fibs retracement. Call it the 511.65 price support level, and that will additionally align with in correlation of the 50-day moving average off the USTECH100 space, and that will be just shy of hitting that 1% mark, which will ultimately take that price support level out. So that level is validated as a critical and psychological level, in my opinion. And if and when we go on to retest and re-challenge that key inflection point, short sellers, bear traders want to see a validated, big time, solid hourly red infused candle breakdown close below that key inflection point to usher in an additional big time sell signal breakdown, only increasing the odds for an additional and more violent market downturn to come. Long traders, bull traders need to defend this primary uptrend line in correlation of that nice clean divergent low that I had put in. There's nothing more bearish than a false breakout, trapping in all of these longs and these bull traders. They would need to defend as aggressive and as velocity, make no mistake about it, is heating up here. Whether we're going nowhere, these are massive swings in each direction, only fueling an additional big inflection point and or precarious state of the market. Long traders, bull traders would need to defend that level really at all costs to avert that breakdown sell signal of ultimately burning and negating the positive and bullish divergences would be therefore negated, burned through, and the crash would amplify to the downside, in my opinion, in the shadow of spiking yields, faltering equities, inflation roaring back, and the near-term macro landscape teetering on the edge, where markets are caught between the hammer of tightening financial conditions and with every data point and policy shift fanning the flames of volatility.